U.S. markets opened November on a positive note, with all three major American indices gaining. That was mostly fueled by strong performances from Amazon and Intel, which helped lift investors' sentiment despite a disappointing jobs report showing only 12,000 jobs added in October. In Europe, markets reacted cautiously following the U.S. trends, with investors bracing for upcoming economic data. Meanwhile, European stocks faced slight declines as traders weighed the implications of the U.S. jobs report on Fed policy. Asian markets exhibited mixed results. The Kegson manufacturing PMI for China showed a rebound, yet broader market sentiment was muted, with Japan's Nikkei 225 dropping 2.63% amid ongoing concerns over monetary policy. Crude oil prices experienced a slight uptick due to reports of potential escalations in West Asia. Brent crude trades closer to $75 per barrel, while U.S. oil trades just below $70 a barrel. Gold prices dipped on the last trading day of the week, pressured by a strong U.S. dollar and rising Treasury yields. However, expectations of a Federal Reserve rate cut next week provided some support against further losses. Well, as the U.S. presidential polls approach on November 5th, markets are poised for fluctuations. This landmark event could majorly influence investor sentiment and global markets in the coming days. Well, for more on this, we're now being joined by Anand K. Rathi, co-founder Mira Money, Bengaluru. Welcome to World Business Watch. Mr. Rathi, first up, what is your outlook for the global markets?
Thank you for having me. Yes, the global markets have had a great year till now. Most of the global markets, if you actually see, including US, China, India, Japan, and also Germany, have gone through good double-digit returns. This is backed because of good corporate earnings that these countries have seen, and also because of China's stimulus. But we believe that the going forward, in the days going forward, we may see some bit of slowness, or the momentum can actually shift more towards slower growth, and that could well mean that the kind of returns that most of the investors in these economies have seen could well be a little moderated. So the healthy double-digit returns that these countries have experienced may now go down to closer to double-digit returns and not very high is what our expectations are.
Right, Mr. Rathi, do you expect market fluctuations to continue, especially with U.S. elections slated on November 5th?
Oh, definitely, yes. It's a big event. Any election in countries like US is going to affect the global markets for that during that period. Of course, after that, it is again back to basics into those countries themselves. For example, yes, Germany may get affected for that one whole week, but after that, it will be back to the basics of German as a country. But US elections will be a key for a lot of countries like China. It will be a key for some part of economy of India, and of course US in itself. So that is going to affect the volatility. It is going to increase the volatility. But after that, you will see the normal things like rate cuts, Fed, jobs, crude oil, global tensions. These will come back into the picture. But the next couple of weeks will be hogged by the US presidential election limelight.
Right. Talking about the Indian markets, what is your outlook on the Indian markets in the short to medium term?
So Indian markets definitely have gone through some bit of stress, especially in the month of October. This is primarily because lower than expected earnings that were announced by companies that declared results. We did some analysis and we believe that about 1 to 2% earnings cut was expected, but I think the companies didn't show a great picture. And that's the reason why Indian markets corrected close to by about 7-8% in the last 1 month. We believe that the momentum shift hasn't yet happened towards upside. There could be some more pain. There could be some glimpse of hope that people are looking for, which could be in the form of November GST exactly after Diwali, whatever is the GST number that the government comes in declares. That will be a glimmer of hope for the markets. Plus, the expectation that the consumption will be back will also shore up the markets in the next couple of quarters. But before that, I don't see the markets going up. So it's going to be a hope rally than the outcome rally. There'll be a lot of stress, is what our belief is in the short term. In the medium term, definitely things will be looking good because generally we believe that the sentiments have been very good during this festive season. So medium term looks pretty positive. Short term, maybe a little more stress is still pending, post which it can actually normalize.
Right, Mr. Rathi, thank you so much for joining us on World Business Watch with your insights.
Thank you.